Gautam Shah joining in right now to the market discussion to dissect the way forward. And your report aptly states Nifty versus the broader markets, the big battle. Is it really a battle between the two, given the fact that we have seen a catch-up play within the broader universe, the fact that the markets as well are trading at record highs?
Yes, it does look like. I think what we've seen in the last 6 weeks is actually a structural change because for the last 12 to 18 months, it's really been an index bull market, and people complain that it's been very narrow and only 20, 30, 35 stocks have been taking this market higher. But I think that shift which has happened in the last 6 weeks, I think is great news, because now people are not complaining about the fact that the Nifty is pretty much in a range. The market is not, the mainline indices are not doing anything special, but at the same time, you have the mid caps and small caps doing exceedingly well. So every passing day, you have more and more stocks joining the uptrend after laying a foundation for almost 6 to 9 months. So this mid-cap recovery looks genuine. There have been multiple attempts to break out in the last 18 months, but all of them failed. But given the kind of setup that we saw in the third week of December, we were very clear that the shift is going to come, and it has indeed come, with the mid-cap index getting past that number of 17,200. And we believe that the whole of 2020, is going to be a stocks bull market, and I think index is going to take a back seat. So our bigger picture target for the mid-cap index is about 18,500, and we feel at some point of time this year you could even see at level of 20,000. So there is still a lot of money to be made in the mid-cap space. We have been batting for a 1,500 point recovery. 500 points has already happened, and I think there is clearly more to go. The real concern is really on the index, because as we speak, the Nifty is at the doors of a very important resistance in the form of 12,400. Until this level does not get crossed on a closing basis, there is a possibility of the mainline index and some of the popular 5, 7, 10 stocks correcting a little bit from current levels. So one has to be stock specific in this market. I think the mid-cap recovery will continue, and I think that's where the focus should be for most market participants.
Okay, fair enough. That's the view coming in. What about, just the levels that you're mapping out on the index itself? We're talking about that overall disconnect between the macros. I'm not going to get into that, but you believe that it's going to be a Herculean task to get past the current levels of 12,300, 12,400?
Yes, it looks like, because when we look at many of the technical studies, I think this level of 12,400 has a lot of resistance behind it based on studies like patterns, Elliott, indicators, and even a very important trend line. And because of this, I think it's going to be a task for the Nifty to get past 12,400 on a closing basis. If it happens, it's going to be great news, because it will immediately open up another 300, 350 points on the upside. But also what we've noticed in the last 2 weeks is that the index is looking a little exhausted. It has lost momentum. Some of the top quality names of the recent past, HDFC banks of the world, Bajaj finances of the world, they have not led this market higher. There are new stocks, which are doing well. Look at what metals have done. Look at what auto stocks have done. So there are newer pockets in the market which are now taking the Nifty higher, and the usual outperformers are taking a back seat. So I think there is definitely a possibility of a correction, because 12,400 is a very important resistance. But even if that dip were to happen, the market will once again find buying interest around the 12,000, 12,100 area. So I think just for the near term, we could remain locked in the 12,000, 12,400 band. If we do get past this band on the upside, then as I mentioned earlier, we see another 300, 400 points on the upside.
All right, let's talk about sectors in terms of positive trends. What makes you believe that metals and auto are the best bet? Because these have been drags so far.
Oh yes, I think metals, auto and pharma, have been the bigger underperformers of the last couple of years. These three indices lost, if I'm not wrong, anywhere between 40 to 50% from their 2017 highs. So that's serious price destruction across the board. And the top quality names in all of these sectors, lost anywhere between 30 to 50%. So I think there is scope for a lot of recovery. We saw some very important technical triggers develop in the last couple of months, and And after those triggers, the breakout has actually seen nice follow-up. So as we speak, you have a Tata Steel trading at a level of 500. If you look at a Maruti, it has come off from really low levels. Tata Motors, which has been a talking point, is almost close to our target of 200. And even some of the pharmaceutical stocks have steadied themselves really well in the last few weeks. So I think these are the two pockets where there is a lot of upside even from current levels. For the metals index, we are looking at least 15% upside from here, because I think many of these stocks have laid a foundation for almost 6 to 9 months. So this rally is not going to end in a hurry. And even when we look at some of these sectors on the relative strength charts, what we notice is that there is now an upward sloping line which was missing for the last 2 years. So our favorite bets clearly remains in the form of metals, auto, pharma, and to a certain extent the PSU banks.
Okay, so that's a comprehensive overview of what you feel is providing some amount of opportunity. Gautam, you've said to stay light on the large caps as well. Is that because of the kind of potential you see in the mid caps currently? What's the rationale behind that?
Well, this has been a very narrow market for almost 18 months now, and people have been trying to find the economy in the Nifty, but we have been making this point. The economy of our country right now is very much visible in the broader markets, the kind of damage that it has done, and that's where the disconnect has been. I think it's the SIP money that is coming in every month, 9,000 crores, despite what has happened in the last 12 months. That's really helping fund managers park their this surplus funds into some of the top quality names, and that's probably the reason those names have not corrected, whereas the mid caps went through a lot of pain. I would want to believe that the market knows a little more about the future than all of us put together, and it's trying to discount better times. I think the news flow is lagging. The news flow will eventually come, but the price action is telling you that hopefully the economy is going to get back on track, and if that happens, then broader markets will continue to do better and better, because the kind of price destruction that we've seen in 2 years is as bad as 2008. And it's heartening that this market is broadening up, because you cannot have 20-25 stocks taking the market higher for a very, very long period of time, which has actually happened in the last 18 months.
Okay. What about your stance when it comes to the banking sector? How are you looking at financials?
Well, financials have always led the Nifty higher. I think we've seen this in the last 12 months. Whenever Nifty makes a high, you always see the Bank Nifty do well. Now, what has happened in the last 2 or 3 weeks, you might have noticed that the Bank Nifty is having a bit of a problem getting past this level of 32,500. In fact, in the last 2 days, as the Nifty went on to make a new lifetime high, the Bank Nifty has not done that. And that is mainly because, a stock like HDFC Bank, which has 30% weightage in the index, has not been doing as well in the last 3 to 6 months. So this is again a bit of a problem. I don't think the Bank Nifty can move at the same pace. You have to be very stock specific, within this sector, because many of the underperforming banking stocks are now starting to do well, and the top PSU banking name, is something that we really like, and we have recommended in the recent past. So as a whole, it might not do so well. You have to be very, very choosy. But another sector, which we really like at this point is the Nifty IT index. I think the kind of setup that many of the mid-cap IT stocks have, I feel that the IT index will go on to make a new lifetime highs and sustain there. So if at any point of time the mainline indices go through a correction, you need to have a good hedge. You need to have some sort of an insurance, and I think IT gives you that for the next 4 to 6 weeks at least.
Okay, in terms of earnings, Gautam, anything specific that you'll be watching out for this time?
Well, not really, but I would look at the broader number. I think this rally from lower levels needs to be justified on the earnings front. People are looking for that justification, and I think some of the top numbers from the auto and the metals pack and the banking pack, I think these are the 5 or 7 companies that I will look at closely, because the market needs to justify trading at 12,300. And if there is an earnings disappointment, I fear that you could see another round of correction, which at least the charts are not indicating at this point of time. So let's see how it goes in the next 2 weeks.
Thank you so much for joining us this morning.